CEI, pretty much following the play that we spoke about yesterday. Let's go ahead and find out what could happen for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this fine Tuesday night. This is ARCa coming at you with a CEI technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right in. Okay, so I'm not gonna lie, guys, there is a bunch of trickery happening right now within this asset, and I am honestly thinking that there could be a continuation onto the downside. Yesterday, we did speak of coming right back down into this zone here. I gave you guys my potentials before a bounce, right? So initially, we talked about a potential upside to face some type of rejection from the 9 cent area, 950 area, from the 50-day simple moving average, and then facing a rejection, and coming down into the 8 cent area, and then finding the upside to test the 3.618 or the resistance from this descending channel. Okay, so the 3.618 was actually tested almost to the penny. It's at, let's see, the candle high was at 1040. 3.618 was suggesting 1034. Okay, so and then we faced what I called what could be a bull trap. Okay, so it did happen in that manner. We are moving per the playbook. Okay, so another thing to notice here is this. Okay, so since we printed this large 6-hour candle all the way to the downside, it has printed an inverted hammer. Okay, so arguably it could be considered at the top of a trend because we face this downside, and we also face this downside from these two prior iterations from today's price action. Okay, so the wick low here from the earlier candle, the wick low here from the earlier candle today, and then also the pump to the upside from this. So this is arguably a shooting star. Okay, so the thing to notice here is that we have the 10-day simple moving average as a form of resistance right above us, and most importantly, we have the 2.618 as resistance right above us as well. Okay, that's not to say that we can't penetrate it. That's not to say that we can't break through this target. It's just saying that it is a significant target that should be taken into account alongside the 10-day simple moving average. But let's go ahead and gauge a different perspective. Let's open up the 12-hour chart within this and see what it looks like. Okay, so in this case, you can still see that the 12-hour chart, of course, since we can see the aftermarket activity, we still have the 2.618 above us as a resistance, which is located at about 9 cents, 906 to be exact, and we do have the 10-day simple moving average in this case as a form of support. Okay, which is also in confluence with the 2.272 and our resistance from this demand zone that we drew yesterday. Okay, so and very much like the other iteration in the 6-hour, we have printed what could be a shooting star here, and we have essentially, like, please remember, whenever we touch test number 3 of a descending channel, that test number 3 is usually the signal for short sellers or short bias traders to open up their positions. Okay, and usually when they cover is at stages. So in this case, you can actually see that some of those short coverings happened right at the 2.272 and right at that demand zone we were looking at, literally right at that support. Okay, and also the SMA 10. So this was likely an area for short coverings, and then upon testing the channel resistance, this is confirmation. Okay, so what we're doing now is inversely to the other ways we look at it. So we break the top, looking at it like from a short seller's perspective. Okay, look at it from a short seller's perspective. Okay, so if we were talking about the trade for a short seller, so we go up, right? We make this huge shooting star right here. It's like, okay, this is definitely going to sell off. We're on test number 3 of this resistance from the channel. Let's open up the short positions here. We'll cover what could be at the 10-day simple moving average, and also at the 2.272 noted from prior iterations. which could be it was from December 16th pre-market fib. So we used that fib as a type of guide. Okay, so we open up our short positions, and the short-term or scalpers or day traders that are short bias cover their positions right at that SMA 10 or the 2-spot 272 or the top of our demand zone, and it increases the price all the way to the upside, and then they scalp it again right at the resistance, because now we're looking at the newly converted support into resistance. So we validate the resistance and continue to the downside. Okay, so this is a short bias, so that you guys can see how both of the games are played. Okay, so in this case, I am short bias as well. Okay, so I can bet to the upside and to the downside. Okay, you can actually see that the candle that we looked at from earlier yesterday, it did use the 50-day simple moving average for a continuation onto the downside, which is how we were able to see that the downside was imminent. Okay, so now we need further validation to understand where we can go. So let's move on to the next chart. So again, for the macro perspective here, we're looking at the monthly chart, and yes, you can see by the purple trend lines that we are making or assembling a falling wedge. Falling wedges usually present an upside continuation after it realizes its true nature. Usually the breakout happens out of these formations at about 70-75%. Again, it doesn't mean that I don't think we can break out at this point. It just typically happens. And 70-75% is actually over here, which is probably a couple months away. But know that the stock split is coming on the 21st. What was this? Let me just look at that in a shorter time frame. I usually just speak out of turn like this. Yeah, so we can see that the stock 1-to-50 ratio reverse is coming up, and that could potentially send the thing all the way to the downside to where we were looking at, which is, let's look at it one more time. Pardon me. I just drank a lot of water. Okay, so upon the reverse split, of course, this entire chart is going to be shifted to the upside. Okay, it's gonna be, all of this price action is actually going to end up way up here. Okay, so then we're going to have to rematch our formations, because the price structure is not going to change. It's just the price itself. Okay, the number is going to be different. So this is potentially going to be around like $12 or something. I don't know the math to that just yet. I'm not really looking into that. I'm just looking at the price action. So there could be the potential to where we actually capitulate and test the support line of the falling wedge, and also realize the downside from what was the formation that we rode for several months. Okay, so that formation is actually called a right-angled ascending broadening wedge. So usually this is a bearish formation, and as you can see, it is realizing its true nature. Now, upon breakout, we can actually take an implied, or we can take into account a price objective, and that usually is acquired by taking a trend line from the top of the wedge all the way to the bottom of the wedge from the candle where we actually broke out of. Okay, so we then apply it to that breakout point, and you can see that it does have some confluence with the support line of our falling wedge, and it does have let's see, so it definitely has confluence between this falling wedge, the falling wedge support and the trend line itself, of course. So we can see a potential touch down here upon that panic. Okay, so the lowest level I can see would be about 289. Okay, so 289 to about 383, right around there, 3 cents, 383, so, or close to 4 cents, right? So 289 to about 4 cents, 3 to 4 cents would be that initial. Would be that bottom side target. It could happen tomorrow, and then it actually could launch all the way to the upside. So the projected or the objective from this triangle is actually taken upon breakout. Okay, so if we did break out within this monthly candle, which by the way closes in about 9 days, 18 hours, so there's still a lot of time within this one candle we're sitting on. If we were to imply that a breakout happens tomorrow between from this from this wedge, that the price objective to that would be around $88. I know it's massive, but just that's just the playbook rules. I'm not saying that it is going to happen. I'm just telling you that that's usually how we trade it. Okay, we take the trend line from the top of the triangle all the way to the lowest point of the triangle, and we apply it to the point of breakout. Okay, so if we did breakout tomorrow from here, $88 would be the essential target to meet. But please notice that we're on the monthly chart. Okay, so it could likely take time. All right, so the data here for the back test that we performed regarding volatility versus momentum suggested a 73.195% to the upside, okay, based on a total of 44 iterations throughout the entire trading history of CEI, particular to the 12-hour chart. 29 of those iterations regarding the volatility versus momentum profile have guessed the upside correctly. That gives us almost a 66% accuracy to the upside, and that's how we were able to come up with a 73% move to the upside. Okay, so the reason why I'm actually mentioning this now is because it looks like the criteria may be starting to invalidate, and the reason why is because whenever we do reach critical volatility into these zones here, every single red bar you're looking at printing here is a 12-hour read, since we're in the 12-hour chart. Okay, so anytime that critical volatility has happened and we've started a contraction phase from critical volatility, I have taken note of that iteration's upside thrust, the duration of the iteration, and how many times the iteration throughout the entire trading history have actually guessed the upside correctly versus incorrectly. Okay, so I have actually taken note of that throughout the entire trading history by hand. Okay, so this is why you see a plethora of notes here. And in that study, I did get the upside move probabilities. Okay, the averaged statistic. So that's what we're looking at. But the thing is that we need the momentum oscillator to continue being pivoted towards the upside alongside volatility in critical and or contracting to the downside. Okay, so volatility is direction neutral. We pair it with a stochastic momentum indicator like this one here, which is proprietary to TradingView software. And actually the link is down below, an affiliate link. Okay, so that actually helps me out for my trading. Please sign up to the TradingView platform if you would like to trade like me. We could actually look at charts like this together. Okay, so it is now pivoted towards the downside on the 12-hour, and we are at critical volatility, which could suggest a continuation to the downside. And this could actually potentially make the 16th iteration of incorrect, okay, meaning that it went to the downside rather than the upside, and then we would make this total iteration count 45. Okay, so there is kind of a risk happening within the CEI asset. Let's look at the divergence chart here. So divergences usually happen with price opposition to momentum, okay? So now momentum in this case, let me just go ahead and make a quick adjustment to this chart because it's a little wonky. Okay, so yeah, divergences usually happen with the price opposition to momentum. Momentum in this case represented by this indicator RSI. It is relative strength index, and it is suggesting right now with the closure of the prior 12-hour candle from literally today, we actually did confirm 1, 2, 3 drives of primary bullish divergence, and these are primary drives of phantom bullish divergence. And phantom, why? Because they're having to go through price action in order for it to get from point A to point B. Okay, so you can see all of this price action happening in between. You can see that the path from point A to point B is crossing all this action here. So this is why we call it a phantom drive, but it has confirmed and it has since realized, but we did face a massive rejection, and that print of that candle is technically in the upside. Okay, so meaning that it could be a shooting star, and there's a strong possibility that it's not a bullish hammer to continue an upside. Okay, so now let's open up a multi-pane so that we can see several time frames and understand probably a deeper a deeper correlation to the price action that we're looking at right now. And this way we can see if down or up could be a potential for tomorrow's session, which is very difficult to see at this point. COSM is also in a similar situation, suggesting these iterations of just sideways trading. So please, new viewers, please focus in on these properties here for the RSI. These 4 zones right over here are the ones that I would like you to hone in on, since they are located right over here on the chart. Okay, so yeah, 30-minute is suggesting a neutral bias for direction. We are getting a hint from the 14-day moving average represented by this pink line in upside. The purple line represents the RSI signal. Okay, so now the bi-hourly RSI is also suggesting some sideways trading. So very much like the 30-minute, as long as we remain within this shallow area of whatever zone, a gravitational pull into the following zone is likely. But as long as we remain within those shallow areas, sideways trading is very likely, okay? And this is showing nervousness. It's showing that the asset is pensive, and it's potentially pensive on what's going to happen tomorrow. Okay, so there is that strong possibility. Okay, so now another thing that we have to look at here is that the daily time frame is suggesting downside, and it is now in the deep areas of the bear weakness percentile, suggesting a gravitational pull right into bear strength. Okay, the moving average is actually very far away from us, so there is the likelihood to where we can actually capitulate to the downside. This is probably giving us the signal of what can happen after the split. An aggressive downside, which is in accordance to what I'm talking about within the macro perspective of testing potentially that, the 289 level to about 3 cents, or to about 4 cents, okay, 383. So we have to take all these things into account. First of all, you should know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, okay? I need you guys to do your own DD, and everything will be just fine. Okay, you guys, so yeah, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me. The links will be included in the in the description below, so that you could consider maybe joining the ARCa trading community in Discord. Okay, Twitter's down there, and also please don't forget to sign up to TradingView. Yeah, I think that is it for tonight. I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.